The Tinubu government in Nigeria is stepping up on the reform front again. A bill that seeks to grant state governments control over their own oil and mineral resources last week moved one step closer to becoming law after passing its second reading in the House of Representatives. While a decentralized model for resources management has obvious advantages, some analysts are concerned the bill could exacerbate political instability and intensify regional tensions. Others argue that states and communities are better positioned to protect, manage, fairly monetize, and adjudicate over resources. Our special guest, Opeyemi Agbaje, a seasoned consultant, economist, and expert, comments on the legislation. Hello, welcome to Global Business Insights, where we look deeper at business stories all over the world. Many may be concerned that shortcomings in law and order and different levels of maturity in the institutions that we see in states in Nigeria in terms of ability to manage and regulate resources players could imply challenges. I do agree some states will struggle to get it right, but a decentralized model could lead to far better efficiencies and expansion of activity in monetization of resources, also in a way that is closer to and benefits local communities, also potentially leading to a calmer community relations situation. Let's hear from Opeyemi Agbaje, CEO of a leading strategy and business advisory firm, RTC Advisory.
A proposal to decentralize control of those resources and move the control of such resources from the exclusive to the concurrent legislative list. That's in the House of Representatives. The report believes that the law correctly has moved closer to becoming, the bill has moved closer to becoming law. But I must caution that there's still a long way off. It must pass the third reading in the House of Reps. It must be passed into law. The Senate must concur with all of the same provisions as passed by the House of Representatives, and the President must assent to the law passed by the National Assembly. So first of all, I won't say that it's that very close to becoming law. The second point I would like to make is that a proposal to move an item from the exclusive list to the concurrent list means that the word concurrent so means that the power to make laws over that matter has now devolved to both the National Assembly, to the National Assembly and to the state legislature and lawmaking mechanism, rather than being the exclusive preserve of the federal legislature. So the point to make is that simply moving a matter to the concurrent list does not abolish existing federal laws on the issue, but it now gives the states the right to make laws on the areas of that matter that have not yet been covered by the national legislation. So that's my understanding of what moving an item from the exclusive to the concurrent list does. There's a doctrine of covering the field. If the National Assembly has covered an issue, a state law on the same issue will still be inferior to the national law, and therefore the laws already made by the federal legislature or presumed to have been made, maybe they were made by the military and then they become state law and become federal law. Now, having said that, I still think this is a bold and courageous move by the House of Reps. Positively, I positively note that that law, the report says, is being championed by the Speaker himself, Honorable Tajuddin Abbas. That's surprising, but a good development because Honorable Abbas is from the North, and there's a presumption that a law of this kind, the northern legislators are presumed to be likely to be opposed to it because oil resources are controlled mostly in the Niger Delta, and we know that traditionally the northern position has been to try to oppose measures such as this to establish a system of resource control. So I'm impressed that this move is being championed by the Speaker. It sends a powerful and strong message both to the polity, to the system, and to his colleagues in the House of Representatives, especially the ones from the northern part of the country. We must recognize in legislative proposals, in political developments, that Nigeria I view as a careful compromise between the North and the South. That's what defines our history. That's what defines the constitutions we've made. And that's what is also possibly responsible for a lot of the inefficiency in the country. So it's a careful, but in my view, an inefficient compromise. We may also note that there are proposals for devolution of powers in other areas, particularly most noteworthy in the area of security. So these, in my view, are positive developments. They strengthened rather than weakened the federal union of Nigerian peoples and ethnicities, and they may actually make for stronger unity. When people do not feel threatened in their own spaces, they tend to relax and they tend to collaborate more.
Some more business stories. The US could impose secondary tariffs of 25 to 50% on buyers of Russian oil if the president feels Moscow is blocking efforts to end the war in Ukraine. Markets are expected to have their hands full this week digesting new tariff announcements. We also get the latest worldwide PMI survey data giving clues on global economic activity. A major event is on Wednesday, 2nd April, when the US outlines reciprocal tariffs to be imposed. The markets are looking for certainty amid the fog in trade policy and hope the week will bring better clarity. On the PMI, that is Purchasing Managers Index data, apart from the latest activity indicators, analysts are watching forward-looking business expectation indices. April 1 Tuesday, we get the Nigeria March Stanbic IBTC S&P PMI data. US jobless claims takes the spotlight on Thursday before unemployment data and non-farm payrolls are published the next day. Elon Musk said on Friday that his startup XAI has merged with X in an all-stock transaction that values the artificial intelligence company at $80 billion and the social media company at $33 billion. Musk hailed the synergies of the combination, adding that the step combines the data, models, compute, distribution, and talent in a way, of course, that benefits both. Elon Musk has also hinted at stepping away from his involvement with DOGE, that's the Department of Government Efficiency, by late May 2025. Also on Friday, the US core PCE, that's personal consumption expenditure inflation, that's the index which the Fed uses to track prices, which excludes volatile food and energy prices, grew at a faster pace of 2.8% year over year, matching the Fed's forecast provided in the December meeting. Month-on-month core PCE inflation rose by 0.4%, faster than expected, and the former release of 0.3%. The stickiness in inflation was indeed predicted. The next slew of price data will reveal more on the impact of trade tariffs, which are expected to lift the inflation rate, albeit for a temporary period. For how long, though, how much, and how this will impact the Fed, in the words of Powell, will depend on how a combination of fiscal, monetary policy and reform shifts affect the trajectory. Uganda on Sunday signed an oil refinery agreement with UAE-based Alpha MBM Investments for a 60% stake in crude oil refinery in Kabale Holma district. The country's state-run Uganda National Oil Company retains the remaining 40% stake in the 60,000 barrel per day refinery. The new Ghana Central Bank Governor, Johnson Asiama, on Friday unexpectedly announced raising the main interest rate by 100 basis points to 28%, adding that the impact of the rate hike on consumer inflation will be reassessed before the next meeting, that's in May. It was the first interest rate increase since July 2023. Though Ghana's annual consumer inflation eased slightly for the second month to 23.1% in February 2025 from 23.5% in January, the governor says both food and non-food inflation are significantly above expectation and core inflation remains elevated. Last week, Transparency International released its first ever Opacity in Real Estate Ownership (OREO) index, offering the clearest views yet of how far most of the world's major economies are falling short in taking action to keep dirty money out of their property markets. The index was produced by Transparency International and the Anti-Corruption Data Collective and ranks 24 countries. The survey looked at the scope and accessibility of their real estate data and the strength of their anti-money laundering frameworks in the property sector, essential for deterring illicit flows being invested in property. On the top of the list, the best performer was South Africa, followed by Singapore and France. Meanwhile, Australia found itself at the bottom of the ranking, with South Korea and the US not far behind. There are areas for improvement across board, even in countries that performed above average. Transparency measures remain inadequate in most cases, and regulatory loopholes are wide enough to accommodate billions in suspicious wealth flowing into property undetected. In most cases, money launderers can easily hide their identities and invest in real estate with little to no scrutiny. For example, Argentina, China, Germany, Turkey, and the UAE keep their real estate registers shielded from public view, accessible only to authorities, select professionals, users with legitimate interest, or the owners of the property. Where data is available, important details like purchase prices and information on the intermediaries involved in the transaction, like brokers or lawyers, are frequently missing, making it harder to flag undervalued deals or suspicious financing. Asian markets on edge as risk sentiment soars. Overall, the uncertainty around what happens with tariffs this week. Goldman Sachs, in a note yesterday, said they saw tariffs raising recession risk and spiking up inflation in the US. As stimulus measures kick in, China's factory activity was 50.5 in March, up from the prior month and in line with estimates. The non-manufacturing PMI also up 50.8 from 50.4 in February. Stronger signs of recovery for Germany as February retail sales growth data this morning came in much better than expected, leaping 4.9% year-on-year in February compared to 2.9% in January. Well, that's all on this episode of Global Business Insights. Thanks for watching. This is Bode Oshosami.